Today I'm in conversation with Bei Bei Hu, and we're discussing the profound change in the global energy transition and what this means for solar. Despite the current economic shutdown, the global energy transition is well underway. New solar farms last year accounted for nearly half of the world's new energy capacity, alone almost doubling the generation from new fossil-fired fuel power plants. Bei Bei, what is driving this profound change in the global energy mix, and what does it look like for China?
Emma, you're right. Renewable energy is going through an exciting evolution. Photovoltaic energy, otherwise known as solar energy, as a form of electricity generation, is already cheaper than existing coal-fired power stations in many parts of the world. And now that also includes China. The cost of installation is already reducing in the past decade by 80 to 90%, and is expected to halve again in the next decade. By looking at this chart, as you can see, in China alone, the electricity generation costs has reduced from around $7.90 per watt in US dollars terms from 2007 to now around 50 cents per watt. So that means in the future, electricity generation from solar will be an investment decision, an economic investment decision, as opposed to something that is purely based on ideology or driven by government-driven policy demand, which will be very lumpy.
So the economics are making renewable energy favourable, but technological advances in the PV solar industry are also helping to reshape the global energy landscape. Can you tell us a little bit more about this and what that's going to mean across our portfolio?
This is really exciting because renewable energy is now mature enough, especially for PV, is at a point where the industry itself has progressed to a level of maturity that the technology is here to stay, and some of the companies are now becoming investable.
At a macro level, China has been the world's largest investor in renewable energy over the last decade, and will need to continue this push into the segment if it's to meet its carbon neutral target by 2060, as this chart from Tsinghua University shows. Bei Bei, what should we be taking note of to identify the winners in the future development of this shift in the energy mix?
Emma, this is really at the core of what Maple Brown Abbott does. And we've been assessing this industry for many years, and now we have identified three key questions that we ask ourselves. What makes this segment of the industry good for us to invest in? So the three key questions are, the first one is around technology maturity. We want to make sure the investments that we make is not going to be disrupted in a big way in the future. So an industry that has certain level of technology maturity is where we're going to be looking at. And number two is around industry concentration. It's very important, in my opinion, in the future that we pick the industry winners, because the winners, in my opinion, will take more share. And number three, to pick those winners, is about cost leadership. And I think it's very important for a company to be able to make money during the good times as well as the bad times. And that's when they can really gain market share. And you know what? From there, we have derived two industry segments in the solar supply chain that we think are going to be worthwhile investing in. One is polysilicon, the other one is solar glass. And through that, we've also done some fundamental analysis in terms of financial analysis, and also with our ESG framework, we have concluded a few winners that we have picked.
Thanks, Bei Bei. What I find really interesting in this space is the intersection between economics and climate solutions. As the world continues to decarbonise in line with the global push to align with Paris targets, we're going to see carbon-intensive fossil fuel energy sources make way for clean technology, and there's going to present a lot of opportunity for innovations like PV solar. Thanks for sharing your insights on this really interesting topic with us today.